Hello, my name is Von Steinstra. I'm the president of the China Speakers Bureau, and William Bao Bean is one of our speakers, and he's with us to discuss what's going to happen with banks and credit card companies. Now, mobile payments are getting ahead of them. William, can you first tell us a bit on how big is the mobile payment industry in China itself, and what do you expect in the future?
So out of the entire population of 1.5, 1.6 billion people here in China, we've got almost 600 million mobile internet users. In fact, almost all the internet users in China are on mobile. I would say about half or more of the internet users in China are using mobile payment, as opposed to the US or Western Europe, which is just getting started.
So, and what, because in China, the financial infrastructure has been notoriously bad compared to the rest of the world. Does it make a difference in playing field?
Sure. I think you have two things that are helping China leapfrog. The first one is you don't have traditional payment infrastructure. There isn't a huge amount of credit card infrastructure or usage. It's mostly bank card. So you also have consumers that are much more willing to pay online and through their mobile. You don't have a fear of paying through mobile. So on the first point, the users themselves are open to it. On the second side, the companies themselves did not really wait for regulatory approval before launching. So it's a bit of a gray area. And while in the US, regulatory environment has held back many of the banks from being innovative. In China, the players forged ahead without technical approval, launched the products, and then they've been sort of figuring out the regulations since then.
Yeah, well, what struck me when I was in China was that all these things are for free here in Europe and in the US. Credit card companies and banks try to squeeze out their margins by asking money for almost every move you make. And in China, the mobile payments are for free or almost for free. How does that work?
Yeah, so the payments have started off with zero fee. Now they're starting to offer take very low fees. So it's a bit of a different monetization instead of a transaction based where you take a cut of the amount spent. There's actually more money made on marketing, so that when a merchant makes money, they want to advertise, they want to make more money on the platform. Then you see the platform itself start to make money on advertising again, not so much on the actual transaction itself.
But that's bad news for all the traditional banks and credit card companies. If this method gets a foothold in Europe and in the US, they lose their margins.
Sure, sure. I think you've had it's a very tough time for Western financial institutions. You have an industry that's never been that innovative to begin with. Then they tried to get innovative, and they were smacked down by huge fines because some of the more innovative employees within them did some things that were technically probably quite illegal. So you got 10 billion US dollar fines for some major financial institutions, and now they have to be even more careful. So if you look at the internet disrupted the telecom operators. The telecom operators have seen across the world their margins go down by 15, 20, 25% over the last 5, 6, 7 years. The numbers are there to look at. And why is that? Well, you've seen venture capital come in the last year, 32 billion US dollars worth of venture capital went into funding internet companies, new business models that are basically designed to destroy the telecoms business model. Well, what's happening in finance? I think the VCs are targeting the financial institutions next. A year or two ago, you'd only see 2, 3 billion US dollars a year coming from VCs to fintech startups. But last year, we saw 12 billion US in VC money targeting companies that disrupt traditional financial institutions. That's only going to grow. there's a giant target painted on the backs of the big banks. They're trying to adapt, they're trying to react, but it's very difficult for them to innovate internally. They're mostly doing it through investment and acquisition. The problem with investment and acquisition is most of the time it doesn't help their core business. It's looked on as just an investment as opposed to part of those banks themselves. And as a result, you're not seeing the change within the large banks required to allow them to survive as the world changes around them.
It looks a little bit like a dilemma for the banks. They have to change, but they cannot. What would you advise them?
So what we're looking at is not only investment and acquisition, but also setting up separate companies within to do startup within a startup, or business units within a business unit. So if you have say a large bank, set up a Bitcoin operation. We've seen some of the more
The Bitcoin.
some of the more active and aggressive banks set up operations, or look at setting them, or announcing at least that they're setting up operations. They might not be money making for many years or have many months, but the key thing is that they're separate, they're independent, they have the ability to pivot and change. So if the first or second or even third thing that they try fails, they can keep on innovating around and finding a business that can hopefully replace their existing business as things like payments, credit card, loans, and other traditional products as their margins disappear in those verticals.
Interesting option. They have to set up companies to eat their old business and hope that something will survive. Some bankers might not be happy with your predictions, but that's how it is, William. Thank you very much and for this contribution.
Thank you very much.